Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. I'll be traveling for the next couple of days here, so gonna just go ahead and catch up on some important trades that we have open, as well as obviously Bitcoin, Solana, SUI, perhaps a few others if I have the time. But the main thing I want to touch on here today is that liquidation sweep that we saw here. 20 billion liquidation, pretty much gone. There's a small bit left at 77,000, but the probability of that is fairly low, but we're going to talk about good and bad case scenarios depending on what direction you're heading, right? So we'll open up with the liquidation data first, and as we are just kind of, I'm going to refresh here to make sure we got this a good fresh chart. I just want to say thanks again for being an awesome part of my life. Deeply appreciate the amazing support. Don't forget to hit the like button if you get a chance, please. Helps grow the channel, gets us in front of more people, and hopefully get less people destroyed by the market, right? Because again, market makers are pretty vicious, and they have been just destroying a lot of people here recently. But the main thing that they're destroying is the shorts in the market, mainly because there was so much liquidation in the market here recently, and the majority of that has been swept. So why we look at liquidation is just to get some incentive on where the price action could go next. We had a short position open at 76,900, where the price action wicked up there perfectly to that level. In fact, I think we only got filled on one exchange. Some people are still waiting to get filled on that short. The whole point of me mentioning that is that the reason why we wanted to get in at that low 77 or upper 76K range is simply because there was a lot of liquidation there, roughly about 20 billion that just got hit. That was late last night, or afternoon rather, and since then the price has pulled back, but it's also gone sideways and stuck in a range too. So a lot of times when you get range bound like this, the price will break out. It's essentially that just a typical Bollinger Band squeeze, and we're more likely to see a breakout here soon, either up or down. The likelihood of it going down is greater just based on less liquidation in the market, but also, simply put, when you range bound like this after a slow and steady increase, the likelihood of a pullback is greater. The other reason why I feel that way too is because liquidation delta is way too high. So in case you're not familiar with this, perhaps you're maybe unclear on what it is. Liquidation delta basically tells us basically the average amount of shorts or longs in the market at any given time. While we still have plenty of shorts in the market, you take a look here, we're upwards of about 12 billion. We've been maintaining $12 billion in long liquidation delta for the last 24 hours. Okay, and prior to that, it was stuck between 8 and 10. 8 and 10 is usually that tipping point where the price action will likely pull back. Again, the reason why this is relevant is just kind of lets us know that we have way too many longs in the market. Market makers know that. The price can't go much higher. They're going to pull it back really fast, and we're probably going to see a slight dump here in the near future. Now, when I say dump, we're not talking 60K range. I think that's a low probability, maybe even an improbability. But the truth is, we're in a position right now where it's going to seem very likely for that to a pullback to occur, just again, based on those metrics alone. We want to look at the TA as well and kind of understand. If we look here, we can see open interest. The most amount of open interest we have is roughly 75K, 74.4, and 73.7. Okay, those are kind of the three concentrated areas, implying we have a lot of support to the downside. So I would not begin to suspect, now that we've broken through 70K and haven't looked back, that we're going to nosedive, so to speak. Low 70K, maybe, but I'm feeling like 73, 74K is the immediate bottom. Okay. Again, that's just based on what we see here so far in the charts. Can that change? Absolutely. It changes every second of every day. So let's take a quick look at the daily time frame, work our way down, see what's going on, see if there's anything we can identify here. And just to clarify, the daily time frame is going to look pretty bullish. There's no other way around it. You're not going to see these hidden bearish divergences or anything like that just yet. In fact, I kind of poke fun at the whole hidden bearish divergence or bullish divergence because I think it's garbage that it's hidden. It should be obvious, and a lot of times that's just kind of people reaching, I feel. What we want to pay attention to the most would be money flow, the MFI, the screen bar here, and then also, of course, just general volume, right? Volume starts to die off, then we should experience a potential correction. Either way, we're seeing a stochastic swing to the upside. That's good. RSI is above 70, still maintaining, and then of course we got 30, or sorry, correction, the money flow index is well above 30 and 50, getting closer to 70. The key takeaway here is we got more money flowing into this coin. It is sustainable, it's increasing, and that's good. You got to keep in mind, though, the daily time frame, the MFI can be misleading because we had such a large volume candle here. As those selling pressure, those selling days fall off, keep in mind it's a 14-day lag or 14 candle lag, we're going to start to see the MFI misfire, so to speak. So what's important is to look at the 4-hour time frame because this really tells us more accurately where we're at. Now you got to keep in mind what we're at. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Yeah, okay. So the money flow index should be fairly accurate now based on the simple fact that this very large candle has fallen off, right? And once more, I mention that because 14 candles ago essentially was in this range here, and it's going to give us a better representation of the price action. So we see the MFI above 70. That's a good sign, right? It's generally a positive sign here for the overall situation. We can also see RSI's tapering off and maintaining itself below 70 as well, though. When that happens, that's usually a sign that the price action is cooling off. In other words, if the RSI continues to go down and the price goes sideways, that's a case in point where we're going to probably see the price leg up again from there. Mainly because it's ranging and the RSI is cooling off. People are going to eventually start to realize that this is a good value, and FOMO kicks in and people buy in and the price goes up. Right? That's basically what we're going to be paying attention to here. So I would say if we range bound between now and Monday, the likelihood of an explosion to the upside seems higher. And I say now on Monday because weekends are kind of funky and sometimes it's best not to really trade into the weekends. That's my personal opinion. It's just, again, something I prefer not to do. But let's go ahead and pull this up here and just kind of, instead of speculating, let's talk about the 4-hour time frame because this is a transitionary time frame. Generally speaking, we're seeing a bearish divergence here on the MACD, right? It's a moving average, convergence, divergence, letting us know that we're diverging, so to speak. In other words, this uptrend, while it's been great, is potentially cooling off and pulling back. Now, it doesn't mean the price is going to fall. It just implies that the price doesn't go up. It's more likely to go down, all right? So we want to pay attention to the price action here. I would say if we cannot close above the 76K range, I'm just spitballing for the moment here, today, then we're more likely to go down just based on the overall sense that we cannot seem to pass that threshold. If we zoom in here, let's go ahead and zoom in, kind of give us an idea of where we're at. If we're on the 4-hour time frame here, we can see the best candlestick closure is 76.5. Last two 4-hour candles at 76.4. And we now are printing so far, we're only about 30 minutes in, we're printing a bearish engulfing candle. So these are all signs that are usually implying that we're going to see further downside now that we swept that upper liquidation. The reason why I feel confident in saying we're going to go down if we don't go up soon, again, I know it seems kind of weird, right? What goes up must come down. When we look at the back-end data here, we can see this delta is way too high. People are getting too greedy in the market. You never want to take a long into a Friday when the whole entire week's been green. Usually you're going to see a sell-off on Friday and or Asian markets on Sunday evening are going to open up and dump it, right? Those are usually common characteristics. Again, just historically, that's what we're seeing. For the moment, though, I think at this point it seems much more probable the price is going to go down. Let's just double-check a couple things, though. With Ichimoku Cloud here, this is, again, this is good and bad, depending on how you look at it. So let me clarify. The lagging span is intersecting with the price action. That's generally construed as a take profit on your long position and or consider closing because the fact of the matter is the price action hasn't gone up in any given period of time here, the last 24, 48 hours, and it's more likely to pull back because of that. The second thing, too, is this conversion line and baseline. It's hard to see. It's this green and red line. Sorry, red and blue line. It's kind of telling us we do have some momentum, but it's getting closer. In other words, we're starting to compress. The likelihood of the price action going higher is lower because of that. We are, however, above the cloud, and if you can kind of see it's this green line here. I probably need to increase my opacity here because, I reset my indicators recently. And you can kind of tell that we're below the cloud. Or sorry, correction, we're above the cloud. And while we're above it, that's generally construed as a positive sign. So we got this interesting situation right now where the macro is really strong. 4-hour time frames giving us some signs of pullback. Hourly is just saying, hey, we're discontinuing this uptrend. We're more likely, from a conservative standpoint, to find benefit taking profit now. Okay, so again, if you got in at 70, 71, 72, 73,000, you may want to consider securing profit. It is insane to me how many people hold on for so long and just absolutely get destroyed because they're just too dang greedy. So try not to be one of those. While the price could go higher, there's not a lot of merit or incentive to go too much higher. I mean, granted, we do take a look at liquidation here in the larger picture. 80, 81,000 is starting to fill up. But those are low leverage shorts. We don't have a tremendous amount of high leverage shorts, which is good. That generally implies that the price is less likely to go up. And that, in combination with the liquidation the long liquidation delta being so insanely high, 12 billion, we cannot maintain that price point for too long. Okay, so I personally feel we're going to see a decrease in value here soon. It may not happen today, but quite possibly this weekend. Should see a sell-off here because, again, not just the whole simple what goes up must come down, but the general consensus here is it's not this is a situation is going to turn around. I forgot to look at the 4-hour time frame, and just to clarify, we are still over the 20-day SMA, so by no stretch is this a bearish situation. It's just we're starting to see some signs in the back end, and also a smaller time frames letting us know that this momentous uptrend is coming to an end, and the likelihood of further downside is higher because of those things that you may not normally see or bear to look at, or typically want to look at. So once more, a lot of support in the lower ranges. Let's actually quickly conclude this with support levels, right? Where do you want to take profits on a short if you're going to take one? Where you want to take a long if you're going to do that? Well, the obvious level here is this 0.786 fib at about 74,400. That's the local high. We spent almost 4 days before we broke above that level. You can see pretty obvious the price action had a difficult time getting past that. Now that it has, it came back down to retest that as a support and continue higher. That's the next logical step, okay? I would recommend securing profits maybe even sooner, just to be on the safe side. I think our take profit target for our short at 76,900 is the low 75K range, like 75.3 if I'm not mistaken. Again, we're playing it kind of tighter because we have a lot of control here based on local price action. Keep in mind our local point of control is 75,900. So closing below that would indicate further downside. Closing above that would indicate further upside. But it would make a lot less sense, folks, to see a pump over the weekend after everything is massively overextended for the entire week. Once again, when you are green for 3, 4, 5 days in a row, the likelihood of a pullback is significantly high. So again, while we may not see a monumental drop, we should see some kind of pullback. Once again, 74.4 is the rough estimate for a good dollar cost average target if the price were to come down there. That's right where the 20-day SMA is hanging out. Secondary to that, we got previous highs working as potential new lows at about this 0.618 fib level at about 73,000. And then, of course, 71.7, that was a notorious support level for us in the past. Price pulls back, that's where we see it. The only thing I haven't touched on here is the amount of fair value gaps. It's hard to see, but take it from me. We got a pretty significant fair value gap from 70K to 73K. So there's a chance we could see a wick down to the 71, 72K range. Do I see that happening today or tomorrow? Probably not. I don't really see the price action plummeting. I just think that we're going to see a minor correction before the next leg up. So me personally, the reason why we took some shorts is just to ensure that we get some profits on the way down. And then once the price action hits where it's supposed to, it finds its new low, we're going to take some longs. This is more so a long market, folks. So try not to get too crazy with shorts. The shorts we have open are understandable. They make sense based on key level resistances. All right. And once more, of course, liquidation on the back end too. I'll post all that stuff here in our playout charts rather, on our Twitter, Telegram, and Discord. It's all available here for you if you're curious. Link down below for that. Don't forget to check out our affiliation here as well with Bitunix too, folks. Amazing deposit bonus rewards and, of course, a progressive prize pool upwards of 60K. So register for that. Check it out. We actually got a lot of volume. We're probably going to unlock that 60K prize pool. Thank you so much again for being an amazing part of my life. We'll see you in the next one. Hope you have a great rest of your day. Take care.